Hi, it's Victor here from foreshowmarkets.com. In today's video, we're going to be treating what Forex is all about. So what is Forex? Okay, what is Forex? So we just finished the last video, which was about what are the different asset classes and what is financial market all about. So let's look at this briefly. Okay, so now why do I choose Forex? So we're going to use Forex, right? Remember, we have different asset classes, many asset classes, but we're going to use Forex as our case study. So whatever principles and analysis and methods I teach you in Forex applies across board. It applies across stocks, it applies across commodities, it applies across cryptocurrency, it applies across indices and all of that. So we're using Forex as a case study. So everything we're going to be talking about from here on out is going to be about Forex. And then, so if you have interest in other asset classes, you simply just take what you have learned here, apply to other asset classes, and you are good to go. Okay, so what is Forex? What is Forex? Looking at my slide now. So simply put, Forex is simply the exchange of money from one currency to another. It's as simple as that. Exchange a currency, exchange from the dollar, exchange the dollar to the euro, exchange the dollar to the Japanese yen, exchange the Naira to the dollar. Okay, and like we said earlier, the market where this exchange is done, right, is called the Forex market. You have the physical Forex market where you have daily index, people buying physical cash, but you also have the online non-dealing desk where millions and trillions of dollars are traded and exchanged hands, right, in the Forex market. So the market where this exchange is done is called the Forex market. Okay, and Forex is simply exchange of currency from one exchange of money from one currency to another. Okay, from the name Forex, you can easily deduce how it was formed. Okay, so Forex is simply an abbreviation of foreign. Okay, as you can see here, foreign, F-O-R, combine it with EX from exchange, and so that is how the term Forex came about. So Forex is simply an abbreviation for foreign exchange. Okay, now here's an interesting fact. Forex sounds like, to some people it sounds like gambling, to some people it sounds like Ponzi, but most people do not realize that they do Forex on a daily basis out of the need, right, to travel, out of the need to pay school fees abroad, out of the need to travel abroad, out of the need to buy equipment or clothes or shoes in a country outside of yours. Okay, so simply put, you have more or less taken part in the Forex market if you have exchanged currency from your local currency and vice versa. So example, as a Nigerian, I want to travel from Nigeria to the US. Okay, what we have here is Naira. Okay, in the US, dollar is what is accepted. So if I take Naira from here, especially because the fact that Naira is not very liquid abroad, the demand for Naira in the US is almost zero. So if you take your Naira to the US, right, you would experience a lot of difficulty spending it. You would have to look for a Nigerian over there who is in the business of exchanging currency to do that for you. And of course, the value of the exchange, you might have to lose a bit of that money, right, to exchange Naira to dollar in the US. Okay, so every time you use your local credit card, your debit card, like I paid for hosting of my website yesterday in dollars. Okay, so I have done Forex. Okay, every time you change money, you want to travel abroad, you have done Forex. Every time maybe a family member sends you dollars from the US to Nigeria, maybe Western Union, and you convert it to Naira, you have done Forex. Even if they send you Bitcoin from wherever in the world and you convert that Bitcoin in dollars, you convert it to Naira, you have done Forex. Okay, now interesting thing about Forex, you always have exchange rates. Okay, whenever you talk about forex, the dollar, for example, the naira to the dollar, you talk about what is the exchange rate. When you talk about the euro to the dollar, you talk about what is the exchange rate. So the exchange rate of any currency pair, okay, it always comes in pair: dollar, naira, euro, dollar, okay, Canadian dollar, Japanese yen. So the rate at which a buyer pays to exchange one currency, one local currency, for another local currency of another country, okay, is the exchange rate. And this exchange rate is determined by the forces of supply and demand, okay, determined by the forces of supply and demand. So what does an exchange rate look like? Okay, this is what an exchange rate looks like. Now, the like I said, currencies are always traded in pairs. You can never trade the dollar on its own. Okay, you can never trade the dollar. You can never trade the naira on its own. You have to exchange from one currency to another, or you have to trade as a pair. Okay, naira, dollar. So currently, this slide was done last year. Okay, but currently we're having, maybe I could just take you to Aboki FX. Let's look at Aboki. No, I can't do that here right now. Okay, we'll do that some other time. If you go to Aboki FX, you look at the currency rate right now. It's standing somewhere around 425, 445, and simply meaning that there's a difference of 20 naira there. So 445, this is per USD. Okay, so 20 naira difference between the bid. So this is called the bid, and this is called the ask. Okay, so I take you back to exactly what you're seeing here. Okay, in every exchange rate there is usually a hidden spread. Okay, the hidden spread, if you have not taken a course like this, you would never know about that spread. You just sell your money to your dollar to the malam, buy dollars from the malam. You will not know that they are making a spread on your transactions. Okay, so the rate usually has a hidden spread which cannot be detected by people who have not taken such a class. Now the spread, this is an exchange rate. The spread is the difference between the buying and the selling price, which is the exchanger's profit, or which is the dealer's profit. So as you can see here, if you want to buy dollars from, example, your dealer, example, local malam here, if you want to buy from him, he's going to give you 361 naira per dollar. So let's use the old exchange rate. He's going to give you the ask price, which is his own selling price. So you are going to be buying at 361. He's going to be selling to you at 361. That is the role of the ask price. Okay, now the bid price. Now, so assuming you buy $1,000 of this at 361 from the malam, okay, and 5 minutes later you want to sell that $1,000, he's not going to give you 361 because he's not out there under the sun, all right, for charity. He needs to make a profit. And so you go back to him 5 minutes later, you say, "Ma'am, I want to sell," or "Dealer, I want to sell my $1,000 which I bought from you at 361. He's not going to give you 361. He's going to give you 358 or whatever. But there must be a difference between this bid price and this ask price so that he can make a profit. So his profit on that here is 3 naira per dollar. Okay, so if you go to him and you want to sell to him, he's going to buy from you at 358, while you're going to sell to him at 358. Okay, so the malam sells to you at 361, you buy from him at 361, ask price. Okay, you sell to the malam at 358, the malam buys from you at 358, bid price. Okay, so that's the difference between the bid price and the ask price. And the difference between the bid price and the ask price, which is 361 minus 358, that's 3 naira, that is your spread. Okay, and so currently right now it means that the spread in the market is around 20 naira, and so they will be making a whole lot more profit. And the spread widens because there is volatility, there's a lot of tension, there's a lot of uncertainty. And so when the market goes back to normal, you'll see that spread going back down to, let's say, 425, 430, or 425, 428. Okay, so whenever there's tension, whenever there's volatility, the spread widens, and whenever the tension goes away, the spread closes back up. Okay, so I've given you just 10 minutes of a little bit of what Forex is all about. We're going to be taking it step by step so that we don't overload you. You take 10 minutes of your time, get full understanding of it, then we move to the next level. Okay, so if you like this video, give us a thumbs up, click the like button under this video, and if you're yet to subscribe, make sure you subscribe to this channel, because we're going to be giving you loads of content. And then click the bell beside the subscribe button so you can get notified whenever we upload a new video. This channel is different. We are not just teaching you Forex, we're teaching you how to make money. I'm not going to be teaching you all the jargons that all the other guys are teaching you. They teach you 1,001 things. I'm just going to be teaching you exactly what you need to make money from this market. Alright, so I'll see you in the next video. Have a wonderful profitable trading day. Cheers.